We have all heard the phrase buy the dip during a market crisis. But what if I told you that market confusion, not a full blown collapse, is where the real opportunities lie? It may sound counterintuitive, but while everyone's waiting for the next big crash to deploy their cash, seasoned investors know the truth. Periods of uncertainty often present the best investment opportunities. So today in this video, let's explore why investing during market confusion can be more lucrative than waiting for a full-blown market crash. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. It is easy to romanticize investing during a crisis. In hindsight, those were the golden opportunities, right? Just look at the dot-com bubble in 2000 or the global financial crisis of 2008. But here's the catch. Crises are rare, unpredictable, and when they happen, they feel terrifying. You're not exactly thinking about buying stocks when fear is at its peak. Crises might look like opportunities from the rear view mirror, but in the moment they are chaotic, and timing them is a fool's game. The idea of timing the market sounds great in theory. Waiting for the perfect bottom, making that big buy when things are at their lowest, but market bottoms only become obvious in hindsight. During a crash, all you fear is fear and uncertainty. Every crash feels like the last one. What if it's the end of the market as we know it? Here's the harsh truth. No one can predict when a market bottom will occur or what will trigger it. Trying to guess is not just hard, it's a losing game. So here's where the real opportunity lies. Market confusion. During uncertain times, valuations often become attractive, sentiment is weak, and many investors sit on the sidelines waiting for things to clear up. But by the time the fog lifts, prices have already adjusted. Confusion means less competition, an underrated advantage for the impatient investor. So, investing when the market is unclear requires conviction, the belief that markets will eventually reward patience. Conviction is rooted in preparation, not prediction. It's built on understanding long-term economic drivers like demographics, policy reforms, and intrinsic value. With conviction, you're not swayed by short-term noise. Instead, you're able to stay disciplined even when markets seem uncertain. Market corrections are a natural part of the investing cycle. They are not crashes, they are reality checks. When valuations get too high, markets need to adjust back to fair value. If the market is recalibrating, ensuring that prices reflect the underlying fundamentals. For investors who understand this, corrections are a gift. They create opportunities to buy solid assets at attractive prices. But here's the key. Only those who can look beyond the temporary fog of uncertainty will be able to capitalize on these adjustments. Here's a powerful truth that many overlook. Small bets don't build wealth, smart sizing does. So investing 1,000 rupees in a high return opportunity won't move the needle. But think about this. Deploying 10 lakhs during a period of attractive valuations, even with moderate returns, can lead to transformational wealth growth over time. Now you might be asking, how do you gain the confidence to make such a move during uncertain times? The answer lies in reducing your downside risk, and this is where dynamic asset allocation DAA becomes a game changer. Dynamic asset allocation isn't about chasing the highest returns, it's about smoothing out the ride and making it easier to scale up during uncertain times. So dynamic asset allocation helps reduce interim volatility, improve consistency of returns, and build confidence for larger capital deployment. By adjusting your exposure between equity and debt based on market conditions, DAA strikes a balance against aggressive investing and cautious saving, ensuring you can make bold moves when market opportunities arise without the fear of unpredictable swings. So now what is the final takeaway from this video? The bottom line is you don't need a once in a decade market crash to build wealth. The market presents frequent opportunities, but they are only available to those who are willing to act during uncertain times. Clarity is comfortable, but confusion is where real profits are made if approached with preparation, conviction, and the right strategy. So instead of asking when is the next crash, ask yourself, am I ready to invest when others are unsure? Navigating uncertainty is far easier when you have a solid financial plan and expert guidance by your side. A certified financial planner CFP can help you assess risk, determine your optimal investment size, and build a dynamic asset allocation strategy tailored to your goals. So don't let uncertainty hold you back. Get the right financial partner on your side.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.